Most compliance training teaches you the rules. This course teaches you the job. New analysts get handed policy documents and regulatory text. Then they're given a case file and expected to figure out the rest. I'm a regulatory compliance professional with 20 years of experience across banks, fintechs, crypto firms, and payment institutions. This course is what I wish someone had handed me when I started. You'll learn KYC and customer due diligence, risk assessment, sanction screening, transaction monitoring, suspicious activity escalation, and crypto AML, applied to realistic case scenarios, the way it actually works on the desk. The regulatory coverage spans EU, UK, and US frameworks, FATF, the EU AML package, UK money laundering regulations, and US BSA and OFAC. The course closes with a full capstone case, one business customer, every compliance concern combined, and a recommendation you'd have to defend on a real desk. Built for entry-level analysts, career changers, and anyone moving into a KYC sanctions or financial crime compliance role. Not the theory, the job. Enroll now. The jump from foundation to intermediate isn't about learning more concepts. You already know the concepts. What changes is the quality of judgment you're expected to exercise when the facts in front of you are deeply ambiguous, the customer's explanation is plausible but not quite convincing, and nobody's going to tell you the right answer. At foundation level, a lot of the work is pattern recognition. Does this look like a red flag? Does this match the profile? You're applying a framework to relatively clean scenarios. At intermediate level, the scenarios stop being clean. Ownership structures have 3 or 4 layers. Adverse media comes in from a jurisdiction where the press isn't independent. A sanctions alert has identifiers that partially match and partially don't. A transaction pattern is unusual, but the customer has an explanation that's just credible enough to give you pause. What senior reviewers and QA teams are actually assessing when they look at your work isn't whether you spotted the red flag. They expect that. They're assessing whether your reasoning holds up when it's challenged. Can you explain why you weighted one piece of evidence over another? Can you show that you actually tested the customer's explanation rather than just recording it? Is your conclusion proportionate to the evidence? Or did you either over-escalate based on surface-level concern or under-escalate because the explanation felt good enough? I've reviewed thousands of case files over 2 decades, and the single most common intermediate-level failure isn't missing a red flag. It's closing a case on a rationale that doesn't actually address the risk sitting underneath the surface concern. The flag gets resolved. The deeper question doesn't. The short version, intermediate work is about defensible judgment under ambiguity, not faster pattern recognition. I want to be specific about this because write good notes is advice that doesn't actually help anyone. When a QA reviewer picks up a case file, the first thing they're checking is whether they can follow your reasoning without asking you a single question. Not whether your conclusion was right. Often reasonable analysts reach different conclusions on the same facts. Whether your reasoning is legible, factual, and connected to the evidence you actually had in front of you. The second thing they're checking is whether you tested the explanation. There's a failure pattern I call recording without testing. The customer says their funds come from property sales in Portugal. The analyst writes, customer states funds from property sales in Portugal, and the case gets closed. The explanation got recorded. It didn't get tested. Were there supporting documents? Were the amounts plausible for the property market in that jurisdiction? Was there a timeline that made sense? Third, they're checking proportionality. Did your outcome match the risk picture you described? I've seen cases where an analyst wrote 2 paragraphs of compelling risk analysis and then closed without escalating. I've also seen cases where a routine alert got escalated with thin reasoning because the analyst was nervous about making a call. Both fail QA. The conclusion needs to follow logically from the analysis. Fourth, and this matters more than people expect, they're checking your language. Neutral, factual, evidence-based, no accusations, no emotional language, no defensive hedging like, it is possible that, stacked on top of, it cannot be ruled out that. Pick a lane. State the concern clearly. Say what evidence supports it. Worth remembering, QA isn't reading your case file to catch you out. They're checking whether the file could withstand scrutiny from someone who wasn't there, a regulator, an auditor, or an MLRO making a SAR decision at 2 in the morning on incomplete context. At foundation level, you were taught that concern and suspicion are different thresholds, and that you don't need proof to escalate. Both of those things remain true. But at intermediate level, you need to be more precise about what you're actually communicating when you write a case note or escalation. Concern is an early signal. Something in the file creates doubt, but you haven't yet gathered enough to know whether it rises. Suspicion is a reasoned conclusion that financial crime may be involved, grounded in specific evidence. A defensible decision is something different again. It's a conclusion, plus the reasoning behind it, plus a clear articulation of what evidence would change that conclusion. That last part is what separates intermediate work from foundation work. A good intermediate analyst doesn't just reach a conclusion, they say implicitly or explicitly what they would need to see to reach a different one. No further action at this time, pending receipt of source of wealth documentation requested on the relevant date, is a defensible decision.